What is going on, everyone? Welcome back to another video. Please do consider subscribing. I see all the new subscribers and I can't thank you enough. I truly appreciate it. Thank you for subscribing, and please do consider subscribing if you have not already. Now let's get right into it. This is an interesting one. This is Exxon Mobil, which as of September 13th, 2021 is at $55.37 at the close. I don't really understand this price target for the analysts. It says it's 4 that are buys, 7 that are hold, 0 that are sell, and they call it a moderate buy. I would actually call that a solid hold. There are way more holds than there are buys, almost double, and I don't really understand why it's a buy. I would definitely call this a hold, but I digress. And either way, it is a $70 price target, which is a 27% upside. Stock analysis also, as far as like the smart score goes, it's not the worst. I actually started a 7 before I invest in anything specifically. So a smart score of a 7, this could be a lot worse. Exxon Mobil is probably the best positioned oil company in the world. And let's just talk about that for a second. As much as I love EVs and Tesla and, battery powered vehicles and whatnot, you have to think boats, like cargo ships, container ships, they're not going to be electric one day. They're going to be gas for the long foreseeable future. As long as it isn't being disrupted right away, I don't know. Definitely check me on that in the comments. Let me know if, cargo ships and tanker ships are being, disrupted and are turning into hybrid or electric. Either way, I don't foresee those moving away from gas anytime soon. Same thing goes with airplanes. It'll be really hard. There are no solar powered airplanes right now. You don't see a Delta or a Spirit Air or JetBlue that's like, 100% electric. So that's another way of travel. And 18 wheelers also, they are very hard to turn over into hybrid or electric. Again, Tesla is trying to, and I think Rivian is also, I could have that wrong, but there's another, that one that was embroiled in Nikola, I think. They are also, trying to make trucks, and it's just not going very well. So I don't see those moving off of it. So if you just factor those in, this stock isn't going to go to zero. They also do natural gas too. But this stock isn't going to go to zero. Let's just say that. Let's just get that out of the way. So it makes sense that it is still a buy. There, was a lot of sell-off last year in 2020 for obvious reasons, and now it just seems like it's an okay thing to buy. Now let's get into the income statement. So obviously, oh boy, look at that. 2020 for the full year. I mean, that is just awful. I mean, look at that. That is almost half of what they had made in 2019. And that is just so bad. I mean, it was just a bad year for oil, gas, oil, natural gas, all those refiners. You know, ExxonMobil has always had a profit, always had a profit. You see, last year they had negative $30 million. Oops, actually, sorry, it's negative $22 million, which is absolutely crazy. Uh, that was the thing before, when they were so profitable, they actually had profits, I should say. If we look at their balance sheet, we can actually see that their cash has remained somewhat steady, and their current assets has remained somewhat steady compared to, prior years. Total current assets is way lower than total current liabilities, so technically they cannot meet their needs. They do not have any working capital, and they cannot meet their needs. That's not really a good thing. It's not really what you want to see. Still, though, they have a lot of assets compared to their liabilities, obviously because they're such a huge refining company and oil, natural gas, like I said, and other services. So they definitely have, a lot that they have held onto as far as assets, and that's also like mostly long-term investments too. If we actually look, we can see that their long-term debt is the highest it's ever been. That's not what you want to see. They cannot pay that down anytime soon, as we can see from here. How they have only about 4.3 billion in cash, so that's not very good. And let's move over to the cash flow statement. So obviously they had negative $23 million net income. They were starting off with a positive net income in previous years, but not so much anymore. If we actually look at things like long-term debt issuances in 2020 in order to stay afloat. We just saw they had a negative $23 million net income. They had to issue, where was it? They had to issue 23 million. Here it is, 23 million in long-term debt. So they've slowly been issuing long-term debt, and they've repaid almost nothing, which is not good. I don't know who the CFO is of ExxonMobil, but clearly they are not. They're not doing very well. They don't have any working capital, and they're not repaying any of their debt at all. They have not been. Let's just say that. And their dividends are still consistent. If not, it's actually been growing. So that's a good thing to see if you're a long-term shareholder of ExxonMobil. It's only 14 billion, in dividends, but obviously they had to borrow against that by issuing long-term debt so they can actually make those dividend payments. But it's good to see that it is, because a lot of people rely on that. A lot of older folks, they do have ExxonMobil shares, legacy shares, and they rely on that income from that that the dividend provides every quarter, and they still have a very high dividend rate. I think it's over 6% still. ExxonMobil does, which is one of the highest in the natural gas and oil stocks. And as we can see, they still have a positive cash flow, but it's only because they did a lot of borrowing. So they did a lot of net cash from financing. So they had to do a lot of financing in order to be cash flow positive. Otherwise, they're pretty mediocre cash flow. And if we look at a portfolio of ExxonMobil starting in January 1986, because this only goes back to 1985 actually, we can see that $10,000 equated to $279,000 today, and that's a 9.78% return. That's less than the actual stock market, so you would actually probably have a lot more if you were in the stock market. We can actually check that right now. If we check the SPY in a second portfolio, the same amount during the same time. Well, this one's actually a little bit lighter because SPY started in January 1994, but even still, you would have a lot more money, almost double. You would have double your money in the S&P than you would have in ExxonMobil. So obviously, ExxonMobil is not the best stock to own, holding it against the S&P 500 in the long term. And as we can see here, the S&P 500 just grew, and 2020 is really what did in ExxonMobil, and yet, S&P just kept going up and up and up. So with that being said, thank you guys so much for watching. Please do subscribe and let me know if you liked the video, and I'll see you soon.